everybody, this is Fides Bingulio, a working millennial, financial literacy advocate, photography enthusiast, and a lifelong learner. And if you haven't subscribed to my channel, don't forget to hit that like and subscribe button so that you will be updated on my latest video uploads. Now for today's episode, I will be sharing about dividend investing. This is another part of our stock market series. So sa mga hindi pa alam kung paano mag-invest sa stock market, specifically in the Philippine stock market, you can go to my beginner's guide video to Philippine stock market. So I'll give the link on this video. So what are dividends? So basically dividends, this are surplus from the earnings of the company. Pag walang earnings ang company, hindi siya nakakabigay or makapagbibigay ng dividend sa kanyang mga shareholders. It's also a great indicator if the company is giving out dividends kasi nga hindi ka naman makakapagbigay sa mga shareholders if you are not earning, so you cannot distribute dividend. So much for dividend investing. We are going to talk about preferred shares. So in the stock market, when we invest, there are two types of shares that we can possibly buy. First is common share, which are traded or sold in the market based on the current market price. These are the stocks or shares such as the BDO, BPI, URC, Mega World, SM Investments Corporation, SM Prime Holdings, etc. The preferred shares, hindi siya always available in the market. Depends on the publicly listed companies if they will offer preferred shares. So, hindi siya always available in the market. Once you purchase a preferred share, the return is already guaranteed and alam mo na ang marireceive mo. There is a specific holding period for a preferred share. In that period of time, there is what we call uncertainty. So, the longer you are exposed with uncertainty, guaranteed with a greater return. There are two types of preferred share. The first one is the preferred share Series 3A. The holding period for that preferred share, the Series 3A, is 5.5 years and it gives a dividend yield of 6.87% per annum. While the preferred shares Series 3B, it gives a 7.13% per annum. There's another question here. Is it possible that we can withdraw or sell our preferred shares before the holding period? There are instances that some investors might need cash. They want to liquidate some of their assets. Yes, you can liquidate your preferred shares, but as to its liquidity, it depends also if there will be buyers for your preferred shares. And once we have purchased the preferred shares, it is subject to volatility just like any other share or stock. But the main difference here on what drives the prices of the preferred shares is the interest rate. The relationship between the preferred shares and the interest rates is inversely proportional. So, if the interest rates rise, the prices of the preferred shares fall. Next question is, if I will hold the preferred share for that said period of time, how much will I be getting? So when you purchase a preferred share, once you have hold that preferred share for the agreed term, so the money that you have invested will be intact and it will not be subject to market volatility. You have invested, let's say for 100,000 pesos, still you get to receive the 100,000 pesos you have invested plus the dividends. Whereas if you will liquidate it, maybe the price of the preferred share have already diminished and that's already a loss for you. This type of investment is good for those people who have low risk tolerance and also they would just like to preserve their cash and have passive income. How preferred shares are better than bonds or time deposits. So preferred shares gives a usual dividend rate of 6 to 7% range. For bonds, usually the rate of return ranges from 2 to 5%, and for the time deposits, it ranges from 2 to 3%. So compare it with preferred shares, it's still a good investment. That's really a win-win situation. You have already preserved your cash, plus you're getting the dividends. I hope that through this video, I have provided other investment options where you can put your money to diversify. As they say, or don't put all of your eggs in one basket so that not all of it goes to the drain. Yeah, that's also another investment principle that we have to remember. So I guess that's it for today's stock market series. And if you have other topics that you would like for me to share or discuss in this vlog, don't forget to comment down below. And also, please don't forget to hit that like and subscribe button so that you'll be updated on my latest video uploads. I wish you a prosperous life. Thank you so much. God bless.